All right, guys. Happy Thursday. Happy 65K stream. Um, I'll be waiting for an audio check and a video check, but I think we're rolling. I'll share my screen here. Okay, all set. So Bitcoin almost an hour to the daily close, sitting above 400K, 65K, $400 or so. This inverse head and shoulders broke out to the upside. We were also looking at the 12-hour. We had this Adam and Eve setup that was completed here. We talked about this during the last few streams. So just doing some recapitulation, some remembering. The Adam and Eve pattern is a sharp drop followed by B recovery and then around the bottom. And you get the confirmation of the pattern once you break out of this neckline, which is this one here. So actually this pattern is right now tradable. This should be a local bottom, at least for BTC. And the measure move for the pattern would be the atom until the neckline and then the same percentage to the upside, which would be almost all-time highs, like 72K. So if you wanted to position yourself for this setup right now, it would be something like this. I would choose the invalidation falling below the neckline and losing one of the previous highs around here. And then the take profit will be a 72K or so. So it's a three risk to reward ratio. I would say a 1-to-3 ratio on this particular long. And also, if you look at the other setup that we're looking at, the inverse head and shoulders, I think it has a different measure move. It's probably a higher target for this one. Yeah, so it's a 60% from the breakout to the upside. And that one's around 75, 76K or so. And if you wanted to take that trade, what you could do is the following. Put your stop loss below the neckline, close to one of those two highs. Once you lose one of those two highs, you're probably invalidating the setup, and then putting your take profit around 75K. And that one has a better risk to reward ratio. It's a 4-to-1 apparently. It's a 1-to-4 risk. Risk being the 1 and 4 being the reward. So that's pretty good. Still not out of the woods at all. It's worth mentioning that we had this move because we had a cool print on the CPI yesterday. Apparently inflation is coming down. At least that's what the data is saying. Core inflation given the lowest numbers in 3 years. So the market got excited about a potential rate cut from the Fed within the summer. So that's why risk assets started running. We saw all-time highs in the SPX, all-time highs in NASDAQ. Both of them had their highest daily candle close yesterday of their history with that data. So so that's good for risk assets. I'm sure we'll get more data in the following months, but for now, that's what propelled this Bitcoin rally that took us out basically out of this danger zone, if you could say so, made us do a higher high within this high. So what I'm really liking here is that we potentially could be doing a potential market structure break from this downtrend that we had in the 12-hour and the daily that was completely controlled by sellers. So now we have a higher high here. And if we confirm this one as being a higher high, then we can confirm this one as being a higher low regarding this one. Because if we deviate back inside here and then just mute them, this higher low will not be confirmed. So we need to just keep pushing higher within the following weeks in order for this higher low to be confirmed, and then we will have that market structure break that we've been waiting for on the downtrend that we had on the low time frames in the daily and the 12-hour. So that's pretty good. We're also sitting above 64,900 bucks, which is a pretty significant level from history. It's an inflection point. It marks the previous top from the first all-time high in 2021 in April. So that's a critical inflection point. It's crazy that we've been chopping beneath these two important levels, the $69,000 level and the $64,900 level, which are both all-time highs from the previous cycle, and also could be somewhat of inflection points to the downside, as we saw, and now that we're reclaiming them, could be worth or could work as support and propel us into higher prices. What's good, Tim? Thanks for the kind words. So that inverse head and shoulders broke out. That's really good. I remember we had a regular head and shoulders pattern in the USDT dominance. We'll see that in a little bit, in a few minutes. But before we're going to look at DXY, because that's basically what the market had in common with this rally. I think there's a potential Garley harmonic here playing out. I got this from the Mitch Ray stream. Shout out to him. He's a G. He's probably one of the best TA guys around. I really admire his work. Above all, overall, his harmonics are pretty good. So what I do like here about the DXY is that we were not able to rival these highs. And for the time being, we're printing a lower high regarding that high. So this could be really good. If we had made a higher high here, then we could be potentially talking about higher levels on the DXY. And that's what you don't want to see for risk assets, or what you don't want to see if you're positioned in risk assets or in technology stocks or any stocks that are related to risk, basically. So we had this flush in the DXY. It's basically the same inverse price action that the market did on the SPX, Nasdaq, and Bitcoin, with the exception of Ethereum. I'm just joking because Ethereum's been kind of dead lately. So yeah, we need to confirm that lower high, and then we can start talking about potentially going lower on the DXY, and maybe start doing some things like this, start maybe building a head and shoulders pattern here, topping pattern, and just make us go lower, since this potentially could be distribution. Okay. Next, I want to look at Bitcoin against the SPX. So we had this small Adam and Eve pattern drawn that we did on Monday, I think, or maybe last week. So it's right there at the neck. It didn't break out as strongly as the USD pair did. I think you could say we're right there at the neck. So we'll have to give it more time, but I think eventually this pattern will play out and it'll keep grinding higher, having some short-term outperformance from Bitcoin to legacy, to traditional finance, or to the SPX on this case. So we're gonna leave that drawn like that. We got above the mid-range of this descending channel, this possibly accumulation channel or bull flag. And as long as we're sitting above that mid-range, I think slowly but surely we'll start to push against that neckline and go into higher prices. So yeah, looks good. It doesn't have that inverse head and shoulders as the USD pair had, but we get this nice Adam and Eve pattern here, bottoming pattern around the 12 points area. So we'll check on that later, but I like what we're seeing actually, because down here on Tuesday we were kind of cooked. We had this bearish engulfing candle, and now we're sitting here, the highest candle close since basically yesterday. So we'll check on that in a few more days. Okay, we're going to go to the USDT dominance chart. This is the head and shoulders that I want to see give out and potentially paint a top here. This will be really good because we're currently in an important inflection point from history. I'll show you in a few minutes why. But we basically came here to the neckline and just tested it as support, and we're sitting there. What you don't want to see here for Bitcoin is this neckline being confirmed as support and just start going rallying again. That will be really bad for BTC. As always, you have to have your invalidations. So this will be the inverted chart, USDT chart, and possibly Bitcoin will look somewhat like this, coming into way deeper value areas than we were recently. But we're just gonna hope that this pattern plays out, that this right shoulder is in, and on another option that we could have, that we're going to entertain this possibility. If that wasn't the right shoulder, there's always a chance to this being the head and market giving us another scare. I'm putting the right shoulder around here and then coming down. So that's possible too. I'm just thinking this was the head, because of this symmetry of the whole structure. The size of the left shoulder is almost the same as the size of the right shoulder, and you have the head, which is a little bit bigger than both shoulders. But there's always a chance that we could be waiting for that right shoulder here to be put on before coming back down. Basically, what you will have to be paying attention here is that we found resistance. We need to find resistance around here. you don't want to be looking into higher prices. I mean, this head goes all the way up to 5.4%. I mean, you could still come up all the way up here and be safe. But if you want the market to start trending higher with conviction, you just need this right shoulder to be put in either at these levels or the highest as here. Because if we start climbing up higher, um, it could get really bad for BTC. So there's always that option. But I'm leaning towards that we're that the right shoulder was already in, and that we're gonna break down to the downside in the short term. I just don't like the fact that yesterday's daily candle close was at the exact level of the neckline. I actually had this drawn from before, and it just came down to the exact level of the neckline. So if you see us coming up higher here on USDT dominance, and you see Bitcoin starting to give out his rally, just don't think that it's over right away, because there's still this chance on the USDT dominance chart. And you would think why I'm so worried or so obsessed with this chart, and it's basically because if you go to the weekly, you'll see that this 4.85%, it's a huge level. This was basically the whole 2020 and 21 and almost 2022 cycle, that each time that we came above here and we tested it as resistance, we had a huge rally on crypto. And then we came all the way up here again when we nuked on May 2021 with the Elon Musk FUD. We found it as resistance again, and then we started rallying again once it was confirmed as resistance. And then when we were full within the bear market, we came all the way up here, tested as resistance again, and failed twice, which gave us a relief rally within crypto. So we're currently just battling with this level right here, trying to deviate and make a deviation above and just propel us here to the downside. So that's why I'm too focused on the daily time frame and the weekly time frame, because this is a really important level. I think if we're unable to find resistance within this area here, this whole supply zone, if we're unable to break down from here, I think Bitcoin's gonna have a rough time for the following months, and it's probably gonna see lower prices, probably low 50Ks, or who knows when it'll stop. It's just how Bitcoin goes. Bitcoin is a momentum driven asset class. Once it starts going, it's really hard to see a momentum shift. So I'm just concerned that we find a top here around this area. And again, I'll repeat this once again for the last time. The top could be already in for USDT. This could be the head on how the structure is looking, and this one could be the right shoulder. And if it's not, I'm not gonna get freaked out immediately, because it could be that this one is just a larger head, and we're about to put the right shoulder around here before having that expected and so long waited rally on BTC and total market cap. So those are my thoughts on USDT dominance. I think this light is way too strong. I'm gonna chill it for just one bit. It look like, okay, I think that's better. So that's for USDT dominance. Gonna leave that like that and hoping that that the setup is already starting to play out. Otherwise, it hasn't broken structure yet. You will need to flip this box in order to start getting worried. Okay, I'm gonna go to the SPX. Okay, so we had some correction today, some selling. We opened the daily above yesterday's close. We sold for a bit, but this could be a bearish pattern, but it isn't. This is probably the half of yesterday's candle, and it could be a piercing line reversal. It's called, but it would have needed to close below this 0.5% of yesterday's candle. If today's candle closed here, it opened above yesterday's candle and it closed below 50% of yesterday's candle, it could be a pattern which is called a piercing line reversal. And it didn't. So it's just a nothing burger candle, in my opinion. It just could tomorrow it could open way higher. It's just a non-event. The important is that we had an all-time high candle close yesterday, all-time high price action, and as a lot of traders like to say, a lot of TA guys who know a lot. When you are on an uptrend, you want to be looking at the higher highs. So if you're making higher highs, you get a signal of a strong uptrend, and we just had a higher high. So I'm not worried. That's your SPX. There isn't much to look left, obviously, because we're all-time highs. We can only throw some fifth levels, to see the next targets. I'm interested in the 0.618 Fibonacci target, maybe from the high to the low of the bear market. Yeah, I think at least we're going to 5,600 points because it's the 1618 retracement or expansion level from Fibonacci. Nasdaq, pretty much the same. Nothing burger event today. Just all the way up here in La La Land. Yesterday had its highest daily candle close. Today we had all-time highs within the price action, and I made a nice video on the Nasdaq yesterday, like a short 5-minute video on why I think the Nasdaq is going to go way higher within the summer, and I'll show you really quickly here on why. But you should go check out that video. I explain it in detail. So we have these channels, these ascending channels that come all the way from basically the 85, since when the Nasdaq was created. You have price action all the way up to the dot-com bubble burst and all the way down to the 2008 financial crisis low. So I think we found some resistance at the mid-range here. That's why we had the selling in April. But right now, we're recovering and working on a bullish monthly candle here. So I think as long as we close this bullish engulfing candle, we're going to go test around 22,000 points, 21,000 points or so. Which is the next level here on the upper side of this channel. And also, I like to look at the Bitcoin bottom indicator, P-cycle bottom indicator for the Nasdaq, because I think there's some alpha there. We're sitting about the 150 moving average of the P-cycle bottom indicator. And every time that we're sitting above it, we just keep rallying. It's what basically you can see here from the data. And every time we fall below it and back tested it as resistance, maybe once or twice, we enter a bear market. As you can see here in 2022, fell below it, back tested as resistance twice, and then marked down. Came all the way up here, back tested as resistance, and we marked down until we found support here in the mid range. We got back above it, back tested as support, and we've just been rallying ever since. So unless we lose this 150 moving average, I think risk assets are going to be bullish, and I think that if the Nasdaq is bullish, you just give it enough time, and people and institutions are going to go further down the risk curve into Bitcoin, because basically that's how psychology works. If risk assets are doing good, money will eventually rotate into riskier assets, which is BTC. So you can see that this didn't only happen in 2022. It also happened in the financial crisis of 2008. We fell we fell below the red moving average, tried to get back above it, fell below, back tested as resistance, marked down, marked down, marked down, and we didn't even have a back test here. So every time that you're below it and you cannot get back above it after a back test, you're in a bear market. And once you get back above it and you are able to sustain price above it, like here, you just had some difficulties, but you stay within the mid range. You just kept grinding higher slowly. The same happened with the dot-com bubble burst. We fell below the red moving average, back tested as resistance there, and just huge markdown across the board. And here we had a back test as resistance, and we did not uptrend until we were actually able to get back above it. So I think this is a dream scenario for Nasdaq, being honest, and eventually BTC, because we've been above the 150-day moving average since February 2023, which is until now 15 months, 455 days. So I don't see any reason to get bearish for the Nasdaq here. I think it's just going to keep going higher. We'll be checking on this moving average every now and then to see that everything is good, but that I think this is a good signal. Just sitting up here at all-time highs is a really good signal for risk assets. Okay, I'm gonna go back to the daily and to linear scale, not log mode. Okay, we went through BTC, Nasdaq, SPX, Bitcoin, USDT dominance. We'll look at Bitcoin dominance here. Okay, so we've been talking about Bitcoin dominance being bullish because that's the trend. And sometimes the best you can do is just follow the trend. The trend is your friend. Although I will say that everyone, I think most of technical patterns that are 60% dominance. I think Benjamin Cohen has been calling for that. Mitch Ray as well, which is he's a great technician. But I think that we're going to front run the target. I think we might get another test at 57% or so, which is an important level from history, as you can see here, an inflection point that was tested as support in June 2019, and a support again in September 2020, right at the end of DeFi summer. So I think we could be heading to a back test here, but I'm hoping we're going to lose some momentum here, because I think it was at the 3-day that we had some negative momentum. Yeah, building. So we have this bearish divergence here on the 3-day. You had a higher high on momentum here, higher high on price, but you made a higher low on the momentum histogram of the MACD. So I think that if we get that push higher all the way into 57%, we'll probably build slower or lower momentum on the MACD here, and possibly confirm a third bearish divergence on the 3-day for BTCD, and finally give us that rollover. I want you to take this with a grain of salt, though, because I'm not sure. We've been on an uptrend basically for 18 months, so I'm not going to be picking tops here. No one knows actually, but we're starting to build buyer's exhaustion on the 3-day in the MACD histogram. Of course, we could have an immense markup and just destroy this bearish divergence on the histogram and print huge positive momentum. But I'm leaning towards this bearish divergence being real and not going into 60% price target, because there's too much consensus about the 60%. And we talked about when the market is usually has a wide consensus on a price target, it usually doesn't get hit. It reminds me of last cycle, 100K target for BTC. Everyone was waiting for 100K BTC. Basically, 100K BTC was imminent. And I know that in 2017, when the market was really frothy around 15K, 20K, everyone was calling for 100K too. I'm sure people were expecting for 100K more last cycle than the cycle before. But what I'm trying to say is that when there's too much consensus about a price target, it usually gets front run and you don't get it. And I think that this inflection point could be back tested again. And if we get another rejection here, we'll start confirming this bearish divergence, and we could get that alt season that everyone's been waiting for so long, basically. I don't know how long will it last, but if we get that top at 57%, maybe we get a small deviation above to scare everyone here, and then we come down. If we get that, I think we're going to run all the way back to 50% at least. I think 50% might bring some support, and if we get back down to 40%, there will be some bullish momentum on BTCD. This will be a crazy alt season, basically one similar to prior cycle. I think the cycle of 2021 is probably better because we fell down from almost 70%, I think. Yeah, from 73% all the way to 39% in the time span of what? How long was this? Like 150 days, like not even 4 months. We had that crazy alt season. And actually, when we stayed chopping down here, this was a good price action for alts as well. We had some selling into Bitcoin. Obviously, we had some pullbacks, but this one here, this one in particular, in October 2021, was the alt season that we had on the Bitcoin recovery and an all-time high at 69K after we nuked in April. So that's my bias on BTCD, but you have to know that on the technical side of this, you cannot be looking for tops because this is a strong uptrend, and who knows where it's going to stop. I just can tell you that the 50% level, it's a big one. It's an inflection point from the past. It's already been tested here when we had that crazy wars news that had a massive capitulation on alts. So I'm expecting and hoping, this is just my hopes, that we're going to backtest it as resistance and start confirming that bearish divergence on the MACD on the 3-day time frame, and just start getting that rollover that everyone's been talking about. I don't know when it's going to happen, but I'm guessing it's going to happen within the next month. We'll check back in mid-June or so, and we'll see how it's doing. Maybe it blasts through, but I'm confident we're not going to see 60K. I mean 60%, because there's just too many people waiting for it. Okay, so that's Bitcoin dominance. Let's go into our risk on asset. I think our risk on index here is Solana. I think prior cycle risk on index was Ethereum. This time around, I think it's Sol. So Sol sitting above this higher range of this channel, descending channel. I know we had this massive deviation above, but this channel has been playing too good in order to not be noticed. We had a massive engulfing candle yesterday. We got back above the 143 level, which we've been talking about. That's big. It comes all the way from previous cycle. Big inflection point here. Confirmed basically the complacency shoulder in April 2022. Big support in October 2021, and all around it's just been regarded as a big inflection point within this cycle and previous one. So I think Sol looks good as long as we're above 143 bucks. We're attempting a breakout above this channel. If we fail to sustain price action above this channel, I think we're going to get back below it and maybe come back down to the mid-range. But what I'm looking at, Sol BTC, is giving me hints and clues that it may not be coming down. You also have, I mean, you don't have that pattern here, but you do have it in Sol BTC, and we're going to look at it in just a few seconds. But just working on your highest daily candle close since April 11. This is really good. And confirming the bullish engulfing candle. We still need 30 more minutes of price to hold here for the candle close. But if this candle closes green in 30 more minutes, this bullish engulfing candle Marubosu will be just confirmed. This is a Marubosu candle, which is a huge candle. We actually, with almost no wicks. I wish there was a little bit of less wick to the downside, but I think I could classify that as a Marubosu candle. So that's proper. Okay, I'll look at Sol BTC. Okay, so this is why I think Sol BTC looks better than Sol against the USD pair, because it has a 3 rising valleys pattern. You basically have this low here from April 13, this second low from May 1st, and now this third low from May 13. And basically, this pattern consists of 3 higher lows followed by higher highs within these 2 movements. You need, in order for the pattern to be valid, you need this high to be higher than this one. So that's why you don't have it against USD, but you do have it against Bitcoin. And we're currently fighting with the neckline of the pattern, because the second low, I mean the second high here, marks the neckline for the pattern. So if you break above this neckline, then the pattern will be completed and could be looked at as a valid technical pattern here. So you don't have this against the USDT pair. I expect this one to continue grinding higher against Bitcoin, which most likely be good price action against the dollar. We're also about a good inflection point here. If you look at this, inflection point comes from the 2021 cycle on October 20, then back tested again as support in January 29, and it's been regarded as resistance twice and support once this cycle. So the fact that we broke above it with a bullish engulfing candle here yesterday, and we're confirming this bullish engulfing candle today, plus this 3 rising valleys pattern that has not yet been confirmed, I think Solana looks good. And as we were talking about, Solana is probably the risk index for this cycle, taking Ethereum's place that was on last cycle. So if Sol BTC looks good, I think risk looks good within the crypto markets. So that's your Sol BTC. We can look at some price targets if we get a confirmation of the 3 rising valleys pattern. Oh wow, it's huge. It's at 28% above the breakout. So if we get confirmation of this target, of this pattern, the target will be at 28% at 31, almost 32,000 satoshis, which coincides with this big selling or resistance area. So this pattern being completed, the technical target or the measured move would be around this area. I know there's still some price development to be done, but we're going to get ahead of ourselves a little bit, and we're going to assume that this pattern will be complete, will be confirmed. You can position yourself somewhere like that with a 1 to 3.5 risk to reward ratio. So could be a good trade against BTC once this pattern gets completed. I'm going to delete this because we don't have the pattern yet. Okay, let's look at Pepe. Okay. Pepe has been having some selling today. I'm guessing because GME has been selling for a minute. So memes have been taking a hit for the past few hours, maybe yesterday too. We had this GME Roaring Kitty explosion here, basically. Although the setup was looking really good, we had this huge markup into all-time highs when Roaring Kitty came back and started posting memes, and GMEs exploded on Monday. So we're having some selling here. I'm not too confirmed. I mean, I'm not too worried on Pepe because it's honestly it's not my favorite scenario. I would have liked it to go a little bit further above here and just leaving this whole price action behind us. But I think that if you want to get worried about Pepe, I would be looking into around this area, getting confirmed as support and not coming back below the range. If we just lose all of this momentum and just start slowly coming back into this range, then you can start thinking that Pepe might be cooling off for some time. Plus, there has been a lot of FUD, to memes lately on the timeline. But the thing is that there's a lot of dog coins. I mean, you have Doge, you have Floki, you have Shiv, you have Whiff, you have Bonk, you have like 10 dog memes, like 10 dog coins, but there's only one frog, Pepe is not as diluted as the other dog coins, is what I'm trying to say. And dilution is kind of real memes now, I think, because there's way too many memes going around. There's almost like meme kind of asset class. You have the political kind of memes. You have Bowden, you have Trump, you have all sorts of memes. So I remain confident on Pepe as long as we don't come back below this range. I know this looks a little bit toppy, but this was a higher high. This was actually all-time highs. So as long as we put on a higher low, then we're going to see immediate price action to the upside, in my opinion. You just need to put on a higher low and not come back within this range, and everything will be all right, like the king said, Bob Marley. I would like to look at Pepe BTC too. So yeah, similar case. I wouldn't like price action to be back below this range. I think as long as we make a higher low, then everything's good. There isn't much to say. We have made price targets. I think the price targets on the USD pair, but yeah, it just looks good. Some selling to do. Maybe GME could get some more price action within next week, and this just going to keep going up. It's just yeah, that's the thing with me with Pepe. Let's look at render, because render has been having some good performance here. Working on its lowest daily candle close since May 14. We had a big engulfing candle actually on May 14. We'll look at the BTC pair because we have some more structures developing there, but I don't know. It could just same as with Pepe, just made a higher high. We just went higher low. It obviously doesn't look as good as Pepe. I think this whole rally was fueled by the Nvidia earnings, and on the long-term case for render, I think this one's going to be a good outperformer for this cycle because I think AI coins will do good. I think Nvidia will keep doing good. Besides anything that anyone could think. So yeah, we don't have that much price action to the left because we're basically sitting right next to all-time highs here. So now, not too many horizontal levels to probably look for support. You just have these two lows here. So as long as you put on a higher low here, then you'll continue to see the render of performance. I want to look at render BTC. Okay, so we talked about this area on live stream. We actually said that it was probably going to sell off a little bit, and there you have it. This was just we're losing some momentum here. Wow, you have this crazy bearish divergence here. Oh no, I'm sorry. It's actually confluence. It's bullish confluence. So never mind. I thought it could have been a divergence, but it's not. So it's actually had a lot of positive momentum here. So that's bullish convergence. So this asset is within a broadening wedge or an expanding channel. I think this asset, this kind of structure represents the psychology of a bullish asset that has a bearish bias. Actually, when you have a broadening wedge or an expanding ascending channel, basically when you have some structures like this, that looks somewhat like this, you know, and you have some price action here. This market structure represents the psychology of a bullish asset, of an asset that has demand but has a bearish bias to it. That's what this structure represent, and you can actually trade this setup. When you have that uptrend, you basically, when you have that going on, you just basically know that this asset is going to probably explode to the upside. And where you have to be careful, where does the pattern end basically on the blow off top here. Um, let's imagine it does a blow off top here. That if you have something like that and you come back into the range, the asset's probably cooked until another low gets put in, maybe on the lower side of the channel or even below it. We've seen it in history. I'll show you I'll show you in a few minutes where this pattern developed, and it just basically exploded to the upside. So you have this you have this pattern going on render BTC. This as you can see here, you have this breakout to the upside, but was basically a deviation and came back down all the way to the bottom of the ascending broadening wedge, and now you're just, I don't know, kind of look a little bit double topish, but given the structure that's within, I wouldn't be calling for a double top here. You could just basically put on a higher low here, and you'll be fine. And you can start maybe something like that. I think you can start building on working on that breakout that we were talking about. It may take some time, but it's incredibly bullish if we get this, you know, anywhere around this. I'll show you where this pattern actually played out in the past. Okay, going to go back in history. I think I had it. I think I have it drawn somewhere. I think it's from Binance. Damn, I deleted it. But I think it was something around here. Okay, I think I remember. Yeah. Something like that, I think. And on the lower end, where did it came from? I think it was something like that. Could have maybe came from lower, but basically you have this trend line here, just being respected like the Jesus here, and you have this blow, not like blow off top here, but you have this retracement here, confirmed the upper side of the ascending broadening wedge as support, and then just went all the way into a blow off top and and to basically the top of the market. There's also one in gold that I want to show you. I think this one I have it. It was on 2004 or so. Okay, here it is. Yes, sir. Look at this beauty. So this could be render right now, render against BTC. You just have this massive ascending browning wedge here. I think it started maybe at the ETF, the gold ETF approval. I'm not sure, but you have the pattern here played exactly as we were talking about. You have this massive blow off top right above the upper side of the channel, the browning wedge, and then you came back here and you back tested as resistance that this same trend line, which was demand, and you back tested as resistance, which was also the same spot as the as testing as resistance this old trend line, and you basically had the end of the bull run. So it's a really good pattern. It's a really good market structure. I like it a lot, and that's why I like what I'm seeing on render BTC, and I'm not gonna fade this into like a possible double top here. I just think this ascending browning wedge will keep playing out, even if we come back here to back test this lower end of the wedge. I'll just remain patient with my render backs. Okay, we could talk about ENA. ENA working on its lowest daily candle close of its history, working on a bearish engulfing candle, building negative momentum. It's just trash, It's possibly not going to stop until 0.5 bucks or so at the 0.786 Fibonacci retracement level, and probably this coin will not have some bullish price action until we see a bottom on ETH BTC, or we see some relief on ETH BTC, because this is an Ethereum coin. Okay, Sui's been trying to do some stuff here. We just basically back tested as support this critical line from history, that was resistance here, resistance again, support here on this April nuke, and down now again back tested as support with a bullish engulfing candle yesterday and a confirmation candle closing in 10 more minutes. But you're just on a massive downtrend. You're putting on lower lows and lower highs. There's a channel here, horizontal channel that's a mid-range, and you just back tested the bottom of the channel as resistance because we had some selling there. It didn't sell off completely. You still have some body to this daily candle, but we'll need to see some more good price action for it in order to get excited. We have this massive bullish divergence on the MACD histogram, basically a huge sell-off and then a lower low on price with basically almost no negative momentum on the MACD. So if you wanted to take a bet here in Sui, just know that you don't have that much of an edge. You're basically on a downtrend, but this level is important. So, and you have the bullish divergence. So it might be worth the trade here. Maybe all the way here into this Fibonacci level here. It's a 1-to-3 risk to reward ratio. So, yep. What else? I'm gonna look at width. Okay. Being honest, I don't like how width looks. If you present me this structure, I would say it's bearish. You just have this crazy run up and just a lot of selling and distribution here going on. Maybe even some Wyckoff distribution. You have the 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 markup and then the up thrust, and maybe just working on some last point of supply or so. But I know that it looks bad, but we just had a bullish engulfing candle yesterday. It's still valid. It didn't get confirmed today because we would have needed a green, candle, daily candle, in order for confirming yesterday's candle. But we're failing to bearishly engulf, so that could be good, But what gives me a little bit of hope on this setup, I have a small bag of WIF and I'm not selling it yet because this could be a potential 3 rising valleys pattern. So the first low, second low, and then the third low here. It's just that the neckline for confirmation is just way above there, in order for the pattern to be confirmed. Yeah, I'm gonna hold on into this back for now. I'm just going to be careful about it because, as I said, it does look bad. But if we get this third low confirmation, maybe we drop a little bit down here even. As long as we don't take out this low, then the pattern will be still valid. So maybe they run up like that. Who knows? No edge on the MACD histogram. Yeah. Okay, I'm gonna look at some good and bad performing coins now. I think the worst performing coin was ENA. Okay, Link, wow. Link pumping 11% today. Didn't see this. That's cool. What's up with Link? Oh wow, he had a bullish engulfing candle yesterday, being confirmed today by a massive markup candle, working on its highest daily candle close since April 11. Pretty impressive. Yeah. He had compression on the Bollinger Bands, working on the expansion here, closing above the upper band. That's what you want to see. And it may be starting a rally. So that's good for Link. Let's look at some levels here to the left. Yeah, the tunnel levels here. It's probably one. Yeah. probably another one here. So getting interesting for Link. I'm gonna look at the Link BTC, see what's going on under the hood. Wow, look at that candle. I'm sure it's happening. Yeah, same thing with Bollinger Bands, got madly compressed. Okay, channel's done. Oh, it's crazy how this coin is in the dumpster after this insane markup against BTC. First time I bought Link, I'm sure it was around here. Yeah, it's an OG coin. That's probably undervalued here. I know the team, probably Sergey, has been selling some tokens to finance the project, and the market didn't like that at all. That's why it's so bad right now. But let's look some levels to the downside here. This is probably an important level here. Yeah. Yep. You get back above that level and things could get interesting for Link BTC. Did you get that? Yeah, you have bullish divergence, I think class C here on the MACD histogram. You made two equal lows while you made a lower low on the MACD momentum and then a higher low and started to go positive again. So that's good for Link. Going to bookmark this coin. I might trade it. Where do I have DeFi? Okay. So that's your good performing coin. What else? Let's look at a bad performing coin that's not ENA. ENA is basically an S coin at this point. I think Optimism was minus 5% on the day. That whole thing is because of Ethereum, you know? Ethereum is really fought it right now. Okay, let's look at this trend line. Might be tested again, who knows? Okay. So yeah, price definitely not good on Optimism, working on a bearish engulfing candle about to be confirmed in 30 seconds. Your lowest daily candle close since April 26th. And just consecutive lower highs and lower lows. You're on a downtrend. No edge on the MACD histogram. We should see some levels to the left here, some inflection points from the past. Well, this is a big point this is a big area for sure. This one too. Yeah, that's definitely a level. Resistance, support, resistance, 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 support. You might be coming back to 1.81 cents to $1.81 on Optimism. Yikes. Bollinger Bands somewhat not compressed, but basically flat, and could start trending lower if we don't find the support around the 2.30 cents, $2.30. All right, I'll be been going live for an hour and 10 minutes. I really appreciate your likes, your comments, spending your time here, looking at the stream. I just bought a mic, so my audio will get better within the next 2 weeks. So yeah, I appreciate you guys subscribing, tuning in, liking, commenting the video. I'll see you guys in the next one. Bye.